Hi, this is David Roche. This is Quantum Strategy, and this is the micro podcast on macro matters. Welcome back to work. What have we got for you? Well, I won't spend very much time on the data coming out or coming up, but what have we had? We've had the Caixin PMIs for China, which show that the service sector continues to drive the economy and that the production sector and therefore the integrated PMI, which includes both services and manufacturing and so on, that it remains weak and actually declined in the month of December. So no great joy there. Let us pass on. I think that we've got the PMIs out of Europe and looking at them, the European wide PMI, that's the economic area, European area PMI, that basically improved a little bit, driven by services, but nothing really to write home about. If I give you the exact figure here, the composite PMI is 49.6 versus 48.3, so still in contractionary territory. And the services was up to 49.5, from 49.5 to 51.6. And interestingly, the service PMI actually got above 50 in Germany, which is really quite an event. But I don't think it's a sign of a renaissance in the European economy. Now, coming up this week, we've got, of course, the US jobs figures, which are on Friday with the Friday jobs report. And we've got the Fed minutes, I think, on Thursday. Fed minutes are going to be very interesting because they're going to explain how the Fed reached this decision that there would be much less interest rate cuts in the future. And that we all need to understand. Going on to other matters and looking at what's going to happen to us all in 2025, I am pretty bearish. I think we will have a bear market. And the reason I am bearish is both for macroeconomic reasons and for geopolitical reasons also. Macroeconomic reasons, lack of positive surprises for markets. We're not going to get the big surprises we've had over the last year or so in terms of interest rates, in terms of inflation. They're simply not going to happen this time around. The Trump tariffs will increase inflation in the United States. There will be many other disruptions which we can relate to as regards geopolitical events. I'll come to them in a minute. But basically, no positive surprises for markets. If markets don't get positive surprises, they stagnate. If they stagnate, people start to sell them. And that, I think, is going to happen in this year. I think the issue of unbalanced growth is a major one because it cannot be sustained. The US is the great exception. So US exceptionalism is what everybody is invested in, and the fact that everybody is invested in it is dangerous. What are the characteristics of unbalanced growth? Well, geographically, the US is the only growth story in town. Between the sectors, services are driving the global economy and manufacturing is dying away. And emerging markets are not participating for two reasons. Number one, if they produce commodities and raw materials that go into manufacturing, much less of them are used and much more of the manufacturing product is composed of services. And secondly, on a geographic scale among emerging markets, China is really in for another year of nothingness because it seems to me the authorities have not understood what needs to be done as regards structural reform, and they have not understood on the cyclical front that they need to really pump a lot of money into the consumer. They're talking about it, and I think they'll go on talking about it, but that's a different thing from walking the walk. It's just talking the talk. And therefore, I think we're faced with very wide divergences between essential bits of the economy globally, which have to jive, which have to move together, and they're not moving together. And that eventually will topple over. Now, how? I think the biggest difference is going to be the reversal of Fed policy during the year, partly driven by Trump's international policies, for tariffs in particular, but also other forms of disruption of trade. It looks to me like the inflation rate is probably going to not get down to 2%. I think the Fed is going to find that very sticky target, very difficult to achieve. And I think by the end of the year, domestic inflation will be rising and the Fed will have to reverse policy. At that point in time, you start to see the tipping over of the economy towards a stagflationary environment, particularly as there are many sectors which are bubbles. For example, non-bank credit, loss-absorbing bonds by banks, and so on. And of course, private equity. These are very big and significant bubbles in the economy, and I would argue that even the S&P is now in bubble terrain. So once they start to tip over, there are a lot of connections to the real economy which run through confidence, credit, asset prices, and therefore the whole question of the sustainability of debt, the sustainability of growth. So I think that the imbalance in global growth will be resolved by the US declining in the second half of the year. So that's one section. The other section we need to talk about is geopolitics. What do I think is going to happen there? Well, I think gray zone warfare is going to go on escalating, and security and economic policy become aligned, which means that you move away, another step away from trading on the basis of globalization to trading on the basis of security alliances. And that is, of course, substituting a less efficient system for a very efficient system, which is of itself inflationary. So that is the economic consequences of gray zone warfare, which escalate, can no longer be avoided and ignored by markets. The second is that I think Putin will reject Trump's Ukrainian deal, which leaves Trump with no real option. He could, of course, repeat the Kabul fiasco and just dump Ukraine, but most unlikely. I think he's more likely to escalate the war against Putin as in an attempt, which I think will probably be successful, of pushing the Russian economy over the brink. Then there is Iran and Israel. That conflict is set to gradually escalate in 2025. Iran, having lost all its proxies, is now going for the only defense policy it can really get, which is to go nuclear. Israel will not settle for that and will take on Iran and have a very major, long-running war with Iran, by which I mean weeks and months, not a kind of flash raid like we've become used to. At some point, I think in 2026, but we'll be building towards it in 2025. And of course, it is an inherently unstable situation. And finally, there is the risk always that China jumps the gun and takes kinetic action against Taiwan in 2025. Now, I think that is a fairly low probability at the moment because China needs to build up its army, navy, and air force and rocket force in order to reach a state of readiness with which she would be happy to take action against Taiwan. So in theory, looking at the scientific measures of what China needs to have on the ground in order to take offensive action against Taiwan, in theory, that should not be the case before 2027. But you never know. If there was a feeling that the economy was very bad in China and you needed a distraction of nationalist fervor, or if the US was distracted and overstretched due to a miscalculation and a major war in the Middle East or Ukraine, then China could see that as an opportunity. In any case, I think the overriding thing to say about geopolitics this year is the gray zone warfare is going to deepen. You only have to look at what Russian and Chinese ships are doing, scraping our infrastructure off the bottom of the sea in a coordinated fashion to understand that we are in a war, and that gray zone war will deepen. And the major event, different to last year and the year before and the decades before, is that security and economic policy will become aligned. So that as gray zone warfare deepens, China and Russia will no longer be able to conduct business as usual, because business as usual is going to be seen as the price you must pay by not indulging in a confrontation with the existing global world order. And that is a price that is simply not going to be paid. So we're going to get increased gray zone warfare and increased alignment of economic policy with the security policies to deal with gray zone warfare. And I think you want to think about that pretty deeply, because it is possibly a bigger, a more important variable in causing a bear market than macroeconomics or macro issues of a civilian nature in this coming year. I hope you have a good week and talk to you again next week.